As the new trading week prepares to kick off right behind me here at the New York Stock Exchange, investors are trying their best to figure out exactly what direction will the markets be moving in during this holiday shortened trading week. Now, a quick note, the markets will be closed this Friday on Christmas Eve in observance of the Christmas holiday because Christmas happens to fall on a Saturday, on a weekend this session, so the markets will be closed instead on Friday. And speaking of Christmas, investors now looking towards the week ahead and whether or not we're going to see a Santa Claus rally or whether or not the markets are going to have a lot of coal in their stockings. And if it's anything like last week, expect a lot of seesaw action because last week off to a rough start. First, the markets taking a bit of a dive following yet another hot inflation report, this time producer prices. Then midweek, the US Federal Reserve led the way for a market boost after announcing it will gradually be slowing down its tapering, while at the same time projecting possibly 3 interest rate hikes in the year 2022. This all coming amid the high inflation figures. And the seesaw trade continued towards the end of the week as investors are now trying their best to figure out what direction exactly will the markets be moving in. And for that, we turn to what will likely move the markets in the week ahead. We begin the week on Monday a bit on the slow side. First in China, as the People's Bank of China's interest rate decision that awaits currently. That rate sits at 3.85%. Meanwhile, Tuesday, we do have a pickup in activity. First, we begin in Germany, where we will see the release of the UK.CONSUMER CONFIDENCE survey results, that of which is expected at negative 0.5%, while over in Canada, we have October retail sales figures expected at negative 1.7%. Wednesday is all about GDP figures, first in the United Kingdom and then the United States. We go across the pond to start off in the United Kingdom. Third quarter GDP quarter over quarter that currently sits at a read of 1.3%, year over year 6.6%. While right here in the United States, third quarter GDP expected at 6.1%, annualized expectations call for 2.1%. Now Thursday, we begin once again in the United Kingdom with the GfK Consumer Confidence read, that of which currently sets at a read of negative 14. While right here in the United States, we have a lot of data due out, mostly durable goods orders. Yes, U.S. durable goods for the month of November expected at 1.5%, while we'll also see the release of U.S. personal income and U.S. personal spending figures for the month of November. Personal income expected at 0.4%, personal spending expected at 0.6%. And that's not all, as we also have the release of Michigan consumer sentiment, that of which is expected at 69.7. And then on Friday, it is Christmas Eve throughout the world, and due to the Christmas holiday falling on a Saturday, most global markets are closed in observance of Christmas. In addition, keep an eye on more political updates throughout the globe during this holiday shortened trading week. In addition, keep an eye on the Omicron variant. And as the holiday shortened trading week continues, keep an eye on all of those updates as they may continue to impact the markets and dominate the headlines heading towards the Christmas weekend. And with that stated, until next week, wishing you all a merry, safe, and very happy Christmas holiday weekend to you all across the globe. I'm James Swinney, reporting for ICM.